Hi. Now let us consider one more example to understand as to how to prepare a cash flow statement. Let us consider balance sheet of a company. Balance sheet of X Limited as below. Data for 2 years given. On the liability side, share capital given as rupees 7 lakhs 20,000, 9 lakhs 70,000. Profit and loss account balance 1 lakh 75,000, 1 lakh 95,000. Every creditors supplies on credit 55,000, 95,000. Fixed assets 6 lakhs 30,000, 8 lakhs 50,000. Stock 1 lakh 15,000, 1 lakh 70,000. Debtors, customer to whom sell goods on credit 30,000. Cash or bank or people call it as cash and the cash equivalent. Okay, cash and the cash equivalent means more specifically the marketable securities. Okay? Marketable securities can quickly be converted back to cash. Okay, so it can be cash balance or bank balance, all means the same. Or sometimes it may be given as cash in hand or balance at bank. So you can combine it in such case. So let us now consider here, it is given in question here as rupees 75,000 and 1 lakh 40,000. Total 9 lakhs 50,000. Here it is 12 lakhs. So these are the data for the year pertaining to 2018 and 19. The total should be the same, 1,60,000. We also check this. 11 plus 5, 16. 9 plus 3, 12,60,000. So this is a basic problem, basic question, wherein balance sheets of 2 years, 2018 opening balance and 2019 closing balance is given, or balances of various accounts like share capital, creditors, assets are given in question, and no other information is given. It is a simple cash flow statement without adjustments, without adjustment. So as like the previous one, first we have to start with cash from operating activity. Cash from operating activity. So we have to start with the P&L account balance. The difference 20,000. Here adjustment regarding non-cash and non-operating expenses are not required. Why? Because P&L account information are not provided. Okay, we can directly adjust current assets, stock and debtors, and current liability. So when you look at stock, so it is increasing. So the normal rule is decrease in current asset and increase in current liability. Will always add cash position. Okay, it should be added. Okay, when you look at stock, stock being current asset, it increases by rupees 55,000. So the opposite should be taken as less. That is the opposite effect. Increase in current asset and decrease in current liability to be taken as part of less. So on this basis, because your investment in stock increases means your cash position will reduce. So that is the reason why we are taking it as part of less item. So as part of less item, I mentioned increase in stock by 55,000. That is the difference between 1 lakh 15 and 1 lakh 70,000. And when you look at debtors, it is 1 lakh 30,000 becomes 1 lakh. So there is a decrease by 30,000. So it should be taken as part of add item. So I'm just adding decrease in debtors. So your investment on debtors has decreased, means you have a increased cash position. You will have more cash in hand. So it should be added. The difference of 30,000. In case of creditors, there is increase by around 40,000. So creditors being current liability, increase in current liability. That means you manage to get more credit Comparing to 2018, in 2019, you managed to get more credit. That means you will have more cash. It will increase your cash. When you are getting your materials on credit, your cash outflow will not be there. You will have more cash in hand. So the increase in liability, especially in terms of creditors, will add your cash position. So it should be taken as part of add category. So here I have to mention increase in creditors is 40. The total 70,000 we added with 20,000, which is the difference between the profit and loss account balance 1,95,000 minus 1,75,000. So from this, I'm just adding 70,000. So it becomes 90,000 less 55,000. That is increase in stock 90,000. Get 35,000 as cash from operating. Net cash from operating. So here we have not adjusted non-operating and non-cash expenses because question gives only the balance sheet. You have no information with regard to any non-cash expenses or non-operating. So we have not done that. Directly we have adjusted changes in current assets and current liabilities and we calculated. So in a question where profit and loss account and balance sheet is given, first you have to adjust the non-cash and non-operating expenses and non-operating income. Then we should adjust changes in current assets and current liabilities to calculate cash from operating activities. Now we move on to the next calculation. So cash from investing activities. So if you go back, you can just see here the company would have invested on its fixed assets. If you look at fixed assets, it has increased. Fixed assets has increased from 6,30,000 to 8 lakhs. So there is an increase by 2,20,000, right? So that means whenever there is increase in asset, that means the company has purchased the asset. And on the other hand, if it is decrease between two numbers, between the previous year and the current year, we should take it as sale of fixed assets. So we have only one item here. There is no other. Supposing investments are given separately, long-term investments, not marketable securities. Marketable securities are short-term. In 1 year, it will be converted into cash. It will be converted into cash. Whereas long-term assets are uh, converted at any period more than 1 year. So such data is not there here. Investment data is not here. So only one asset here, only one investment item, which is investment on fixed assets, which shows that the number has increased. So we are taking it up as purchase of fixed assets. So I move on to the next page and I'm just recording it. So purchase of fixed assets, 2,20,000. How this is arrived? Just nothing but the difference between the closing and the opening balance. This is closing balance and this is opening balance. Just we are comparing it. So the difference is 2,20,000 between these two numbers that we have written there. And as far as financing is concerned, this is where you have to look at on the share capital. It's the source of finance. The capital is in the form of share capital. So it is again it is increasing from 7,20,000 to 9,70,000. So there is around 2.5 lakhs increase capital. 2.5 lakhs increase in capital. Between these two numbers, if you observe, capital has increased. That means additional capital brought in, increase, or shares issued to the tune of 2,50,000. So that should be taken as part of investing activity. So here, this being basic problem, there are no additional information, no additional data, or no too many assets or too many sources of funding. Okay, it's a simple introductory question. So in case of cash from investing activities, I mean cash from financing activity, issue of shares or increase in share capital, 2,50,000. It's nothing but the difference between the closing and the opening balance. So 720 has become 970. The difference is 2,50,000. So now we can consolidate all these three. We have got now cash from operating activity, we have cash from investing activity, and cash from. So now cash flow statement. Cash from operating activities 35,000. So here purchase of fixed assets means cash would have gone out. So cash uh, outflow on investment activity 2,20,000, and cash from financing activity 2 lakhs. When you consolidate this, this is outflow and this is inflow. So it is going to be 30,000 inflow plus 35,000 operating. So it is going to be 65,000 net cash inflow. This is 30 plus 35, 65,000 rupees. Add opening cash balance. So if you go to balance sheet, opening cash balance is given as 75,000. That should be added. Closing cash balance would be 1,40,000. This is going to be your closing cash balance. If you look at it, the closing balance, cash in our bank balance is 1 lakh. So this is how the cash flow statement is to be prepared in case of a simple numerical question problem. So from this statement, we can say that the purchase of asset for 2,20,000 was managed out of cash raised from issue of shares. And the surplus, if you add with operating cash, you get total of 65,000. And after adding this with the opening cash balance, we get closing cash balance as rupees 1,40,000. Hope you are in a position to understand the preparation of cash flow statement in a question where adjustments are not given.